Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today's the 1st of December, 2023. Welcome, everyone. Welcome to this first day of winter, officially. First day of December, yes, a new day. And, of course, welcome to the last month of 2023. This year, yes, I mean, has been an interesting one, but hey, we'll get to that probably at the end of December. We'll look at all the, because we still have to go through December. I think that there could still be some interesting stuff. But hey, look, welcome everyone. I hope you're having a wonderful start of Friday. Before we go further, as always, need to quickly have a read through our risk disclaimers. So, yep, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. I'll disappear from that little left corner, and I'll be back in a bit. Okay, so now then, let's have a look at the, before we go into the charts, as always, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us. If you have any questions, you can always reach out to us and we'll try to assist you as much as we can. You can find a lot of information here. You can also, if you wish to, you can become an affiliate if you wish as well. So, okay, there are plenty of opportunities. You can talk to me about this and we can go from there. So yeah, guys, without further ado, let's jump into the charts. So the first one I want to pick up here is Nikkei 225. And let's see how the month of December ended. I think that let me get rid of this Fibonacci. I think no longer needed. I think it did its job. And look, I mean, I talked about this idea. I said that, hey, maybe this is a nice head and shoulders pattern. But let's have a look at the monthly chart. You can see that, yes, the index did recover about 3.5 months worth of losses. So in general, what do we see here? It's kind of I would say normally like a bullish 3 method. So bullish 3 method. So basically it's something like this, right? So it's this is what I keep on saying. So this is the one that I'm referring to. And this is exactly what we have here. So normally it kind of is a continuation pattern, like if basically further moves to the upside are could be expected. The only problem with that index, I mean, this formation, sometimes I've seen this happening, is that it kind of ends up in a range. So we jump back into monthly. I think I need to get rid of these lines. I think they no longer needed. Yep, I think let's do that. And let's focus on this little maybe head and shoulders pattern. But I'll get to that in a bit. But looking at the monthly chart here, you can see that yes, it was a beautiful push higher. We did move nicely. We did recover everything in the past, like what we lost in the last kind of, I would say maybe 3.5 months. I mean, this not a full month here, but it was a decent up move. Not the greatest up move here, but I mean, we had here back in June a strong up move. So in general, I would say yes, the continuation pattern here is working out nicely. However, like I said, my concern is that whenever we have something like this, we also kind of get a we can get like a move back down. We can start like basically maybe forming let's say drifting lower, forming something of a bullish flag here, and then kind of, you know, popping higher later. So I'll give you a scenario. Like, everybody's thinking, oh great, this is like a continuation pattern, you know, this is where the index could go further. Yes, it could, but you always need to keep that in mind, that the market knows what you see, and they know what you're watching. So basically, like, everybody's thinking, oh great, it's going to be like a continuation pattern, let's go higher, and then suddenly it starts retracing. Everybody starts getting frustrated for the couple of months here, 2-3 months, but let's say this one drifts lower here and then pops higher, basically forming a nice bullish flag, and then this is where continuation pattern works out. So again, I know, frustrating, but hey, you decided to be in this game. Well, you know, let's all suck it up and then kind of do what we can do, and how basically try to position yourselves carefully, guys. In general, always have your how to say it, be a little bit more risk averse, but sometimes you can be, of course, less risk averse, but most of the time try to be risk averse, you know. But anyway. So coming back to the daily chart here, yes, I'm looking at here in the near term is I want to see. I don't know if this is going to happen or not, but because I don't have a crystal ball, I only have my leather ball here. But what I'm trying to figure out here is, will we get something of a head and shoulders pattern or not? So it's somewhere around here. This is the neckline, around maybe that 33,200 zone, something like that. Yes, that could be a nice, good area to watch. So look, let's put it this way. As long as we remain below the 33,500 territory, I will consider a move lower here towards this potential neckline. If that neckline gets cleared, guess what? This could open the door towards some lower levels. Now, I'm not saying this is going to be like very drastic move to the downside or something. No, but a move towards the 50-day EMA here could be possible. So long story short, if we do break this territory, this 33,200 zone, then yes, this will confirm my idea of a possible head and shoulders pattern here. And then I will aim nothing like really drastic here, but only initially towards the 50-day EMA, China 50 index. So in terms of, by the way, in terms of the economic calendar for today, let me just bring it up on my side here. So okay, look, Japanese data. We got some Japanese data, by the way. Unemployment numbers came out much better than expected. I mean, 2.5 officially, 2.5% unemployment in Japan. I mean, wow, almost 97.5% employed in Japan. Wow, that's great. I mean, according to the statistics. However, look, but that's, like I said, that's let's see if that's going to play out in favor of this index. I mean, at the moment, it seems like it's a good thing to have. It's like I think that people even like thought about this, like, yeah, pretty much. I mean, now if the number would come out probably the worse than expected, now that's where probably the action could start. Anyway, coming back to the China index, China 50. So looking at this one, so basically, mission accomplished. What I was talking about here was that if we do drop below this 11,880 zone, I will go lower. My next target will be this 11,557, approximately around here. Tick, tick. Fantastic, fantastic. Great result. What's next? Well, next we need to, because I have been talking about this for like half of November, yes, it worked out perfectly. So now what's next? Next is this, of course, keeping up my eyes on all my 4 eyes on the this barrier. By the way, I'm wearing glasses again. Yesterday I tried without them. Yeah, okay. Okay, maybe I'll try it next time again, but for now I'll stick to my glasses. I like glasses. Anyway. Kind of brings a little bit more contrast to my head, I think. I mean, I'm all like, to my bald head. But anyway, I think that's a little bit better. So what I'm looking at right now is this. Basically, I have this area right here, the lowest point of November of 2022, or in general, the lowest point of 2022. Look at where we have traveled from, basically. I mean, being at the peak here, back in February 2021, near the 20,606, we are all the way back to 11. I mean, this is a wipeout. This is just like 50%. I mean, let me just check price range. There we go. So from here all the way to here, it's 44%. So look at this index. I mean, minus 44% from 2021. Talk about like in bad investment, basically. I mean, I'm not saying that China is a bad investment. No, but the thing is that the index here kind of speaks for itself. And like at the moment, I mean, look, whenever one man's loss is another man's gain, that's for sure. And as you all know, you don't become rich during good times, right? You become rich during bad times because you pick up something which is low. I'm not saying that this is not, let's say, found its bottom. I mean, it could still continue drifting lower, to be honest, because I'm still kind of targeting, if in general, if we look at it historically, I mean, maybe this could be the target, the 10,000 zone. I mean, if we already done the 11,000 and a half, then well, hey, let's go ahead and do the 10,000. I mean, or at least get close to it, because this is just amazing. I mean, this move. I mean, if we would go all the way to 10,000 somewhere, yes, beautiful 50% decline. Wow. I mean, that is something to keep an eye and to keep in mind. So that's why I have a few trend lines here. So basically, for me to start looking at some higher levels, at least in the near term, I would need to see a push above this downside line at least. And of course, we start looking at some other lines. There's a bunch of other trend lines. For example, this one, I mean, too fat here. There we go. But before that, we do have this one as well. So all these tentative lines could be something interesting for the buyers later on. But again, let's not rush into things. First, let's see what's going to happen here in the near term. And in the near term, I am looking at the this hurdle here, this 11,557. If that gets cleared, a forthcoming lower low will be confirmed, and then I'm going to target the lowest point of November 2022. ASX 200. So let's have a look at this one. This one's a little bit on the positive side, and oh, by the way, good morning, everyone. Good morning, everyone. So basically, ASX 200 had a good move higher. Wonderful. That's great. We broke the downside line, but we're still below some other downside lines. For example, this one. And actually, I think I need to maybe adjust this. I mean, maybe it should be somewhere like this. So that's my next target. Look, I said to you before, I said to you this week that if we do break the downside line here, my next target is this other downside line drawn from the high of the 27th of July. So far, so good. We're near the 200-day EMA. We're currently getting a little hold up there. So yeah, why not to kind of aim for this downside line? If that gets cleared, guess what? I'm going to aim for some higher levels, but then I'm keeping a close eye on the 7,174. It might provide good resistance initially, but if that gets clear, the forthcoming higher high will be confirmed. Let's jump into Dow. Wow. Okay, Dow, I mean, yesterday I talked about this and I said, look, to do another 200 points for Dow, it wasn't like it was a piece of cake, right? So I didn't expect this, but okay, I'll take that. I mean, look at this spectacular move by Dow. Dow was like, it seems like Dow was ashamed that it only did a certain amount of gain. Well, if we can say it that way, a certain amount of gain during this month, where NASDAQ did much more. So yeah, Dow said, you know what, let's push it. 9.22. I mean, look, Dow before yesterday I was talking about this, when it was like around 7-8% gain it had. And there we go. We ended the month with a 9% gain, guys. Looking at the monthly chart, I mean, look at this spectacular move. Look at this candle. This is insane. I mean, talk about a continuation pattern. Yes, I mean, the next target for me is, of course, the all-time high near the 36,832 approximately. That's on my chart. Maybe you have a slightly different chart, but still, yep. This is on the. I'm looking at the futures, by the way. maybe on the cash you could have something else. But basically, I'm looking at the futures, and yes, I mean, this is insanity. Look, I would say this way. For now, as long as we stay above the previous highest point of this, no. So what am I? Yes, previous highest point of this year, which is around that 35,850 zone. If we continue to trade above that, then yes, great. I will continue targeting the upside. So basically, my next target is, like I said, that 36,832. But don't get me wrong. Look, at some point, this needs to correct lower. I mean, some of the sellers are really eager to jump in, at least to capture something, you know, but this is just wow. I mean, talk about drawing a Fibonacci level from here. So basically, yes, November has been quite a good month. I mean, it started reversing at the end of October, of course, but in general, yeah, I mean, you take that image here, I mean, wow, that's spectacular. So at the moment, look, it's very difficult to find a good ceiling. I'm not really, once I see the ceiling, then I'll start examining the downside. But at the moment, it's I know that some of you might say, oh, but you're missing out on capturing the peak, you know, like, yeah, I mean, that doesn't work this way, guys. I mean, honestly, it's not always like about perfect entry. Never think about a perfect entry. You always think, what can you squeeze out of this whole game here? You know, if you can squeeze something, congratulations. If you can squeeze €1, pound, dollar, whatever, yen, congratulations, you're doing good. I mean, if you can make yourself a cup of coffee during the day, you know, then you're doing well. Honestly, you're doing well. Think about if you would, you always look at it percentage wise. So always look at things percentage wise, guys. Anyway, coming back to the analysis here. Look, in general, the market, yes, in November we had some, you know, interest rate decisions where nobody hiked, nobody did anything. So yeah, I think that kind of helped stimulate, and everybody was like thinking, oh, Christmas rally is going to be like, we're preparing for the Christmas rally, and the Christmas rally is, there we go, that's our Christmas rally, November Christmas rally. So there we go. So I think that December will be a little bit on the modest side. I don't think that we will see something spectacular like that. I mean, best case scenario, we see something like half of this move, you know. But don't really think that, you know, December could be something like extraordinary like this. No, I mean, it will, even actually, I'm actually thinking that maybe it's going to retrace a little bit. Look, this this month we do have in the US we do have the interest rate decision, right? I mean, obviously no expectation for a hike here. I mean, the expectation is for the rate to remain the same. That's the last meeting we'll have in December by the Fed. The only problem, I mean, watching all this, what I'm expecting that the Fed will come out very hawkish and say, oh, we're ready to, you know, we are ready to, you know, if needed, yes, if needed, we are ready to hike, you know. But the thing is that they have to be very careful with that as well. I mean, they might say throw it out. The market might react negatively, but then the next time they will probably come out saying, "Oh, you know what? Actually, no, inflation is on the right track, so maybe, you know, we will be more a little bit on the dovish side, so we're not going to go any, you know, we're not going to go for any hikes. Maybe we could even consider a cut. So look, in that case, basically, we could see the first. We could see the stock market, for example, correcting back down. Let's say on the words of the Fed, you know, the stock market could correct lower, and after that, the Fed could maybe there during a speech or something somewhere, somebody like maybe some sort of like maybe Kashkari or somebody or you know, comes out, says that, oh, you know what, actually we are looking at some cuts, and then yay, you know, let's go indices. So again, this is me purely speculating. I mean, this is just, I'm going from what I've seen in the past and just trying to build up as you some sort of logic in all this. So at the moment, what I'm seeing here is a little bit unlogical, and but hey, if that's the Christmas rally, we already had it then. Congratulations who missed it. I was a little bit skeptical about all this, but hey, you know, sometimes you get proven wrong. So look, at the moment, everything's looking quite positive still. You can see that I've put this peak here, the 36,057 territory. So basically, if you want to continue targeting the upside, I would say wait. Honestly, we are overextended in the short run. We need a correction. We need at least a decent 20% correction on this move I'm talking about. Not talking about overall, but on this move. So I need to, maybe it's going to be somewhere around here. So this is basically what I'm kind of trying to find logic in all this. So maybe we're going to travel towards the 36,250 zone, something like that, and then find resistance and then reverse back down. So something like this. I mean, honestly, the market is crying for a little correction. So yes, I think it will come, but at what point? I mean, look, this works out perfectly. Actually, you know what? I'm gonna make a call here, and I'm gonna say that hey, maybe this is where we're gonna go to, and then we're gonna stall here, and then we're gonna correct back down. It aligns perfectly with the highest point of September, this 23.6, and it's also the midpoint. This level here is the midpoint between the all-time high and the highest point, the previous highest point of this year. Hey, why not? Let's see. A market does like these nice levels and stuff, so why not? You know, let's wait and see. The S&P 500. So I mean, this one is a little bit on the modest side. I mean, looking at this picture here, we are a little bit on the modest side, but still, judging from what we've gained, yep, 9% as well. So basically, Dow was like, "Hey guys, I want to be in the team. You know, I want to be in the cool kids club. I want to be in the 9%, at least 9% club." So there we go. You know, Dow went for it. S&P was like, you know, there's like S&P is more like an old grandpa who'd like really he made it, but he doesn't care anymore. So he's waiting for the next month to see how it's gonna go. He's taking it slow. And yeah, so for now, we can see if you're trading S&P 500, you should take it slow as well, because wait for this one to clear the 4,580 zone. If we can get that clearance, then wonderful, we'll go higher. For the downside, a drop below the 4,540 zone for me here is required, and then we'll go from there. NASDAQ 100, this one declined yesterday. I mean, this one thought, hey guys, you know what? I'm not gonna shine. It's like, you know, if you're playing, I don't know, ping pong, and you're super awesome, and you see somebody's like losing, and then you're kind of, you know what? Hey, I'll give you this game, you know. And this is like, I'll also make a okay 11 or 10%, you know, gain. So yeah, almost 11. So you know, I'm not gonna go higher. So this is like something. This is how I see this game here. But look, of course, it's not like that. But I'm just trying to find some sort of analogy in the real life. But looking at the picture here, we can see that the index continues to trade around this highest point of July of this year. And we're oscillating around it. I said it before. So for me, in order to consider the move to the downside here, a drop below the 15,932 territory here is required. So this is from where I'll consider a larger correction to the downside. But yeah, look, I'm struggling to figure out if this is not going to end up being something like a range. So we're going to start moving sideways. We're going to reach this upside line, and then boom, we're going to pop higher. So that's why don't rush into things yet, guys. Keep your eyes on this hurdle, this 15,932. If we do drop and stay below it, then yes, I'll consider a larger correction to the downside. If we struggle to stay below it, then maybe, like I said, we could rebound back up here, and we could start oscillating around that highest point of July of this year. And then, but my upside scenario is going to come from this 16,173 territory. The German index, DAX. I mean, another animal, this is a European animal, and I mean, this continues to just pop higher, honestly, like, continues to move. And look, I talked about this recently. I said that if we do stay above this 16,150 zone, my next target is the 16,300. I mean, this week, I kept on saying, Initially, I said that if we do pop and stay above the 16,070, I'll go higher. Boom, one level touched, one target reached, the other target reached. So this is where my actually concern is. I mean, I want to see if this is going to give us a hold up or not. If this little hurdle here, I actually really like it as a good area of resistance. If this little hurdle continues to provide resistance, maybe a bit of a retracement back down towards this upside line, which is a very steep one, could be possible. Now, again, if we do, let's say, retrace back down and we test this upside line, certainly the question then arises, can we actually break that one? Well, of course, that's what a lot of sellers would be willing for, willing to watch for. But again, if it remains intact, guys, it's just going to be a little retracement before another possible leg of buying. So that's why, look, for now, I would say this way. If you're looking for some higher levels on this one, then I would say keep your eyes on the, why is it not putting here and jumping here? So keep your eyes on this hurdle, this 16,300. If we break that, yes, I do have this level here, the 16,615. Let me just double check that. I think that's the all-time high. Is it? Yep. Is it the all-time high? Let me just double check the no. DAX 40. No. Where's that? 40. Is that the one on Trading View? The one I need the one on DAX index. There we go. That's the one. Just as simple as that. So basically, yes, that's the kind of the what I'm looking at here. So this is the highest point, which was we reached it in July this year. So yes, I mean, that's what I'm going to be targeting for. But hey, look, this is the interesting bit. We do have a bunch of strong levels, and I think that I need to mark those. I think that this needs to be the mention, because as you can see here, this level here, by the way, the highest point of June, that was the previous all-time high. Then in July, we overshot that, but we failed to close above that. And look at this beautiful doji reversal. This has been spectacular, and this is what we've seen after that. It was declining. I mean, so that's what I'm saying. So I do have these levels in mind. Also, I do have this little hurdle in mind, this 16,500. That's the inside swing low of the 31st of July, and that could be our next target, to be honest. So let's keep it short and simple. I'm looking at the futures, by the way, so let's keep it short and simple. So at the moment, I'm watching this 16,300 zone in general. We are currently above it, but if we somehow stay below it today or tomorrow, or not tomorrow, on Monday, then maybe a bit of a retracement back down here could be possible. So let's keep an eye on it, and let's not go crazy on this. So the bulls, I would say, if you are long on this one, then you're not, if you've entered somewhere like here, then you're not really missing out on anything. But if you are thinking of entering here because you missed the rally, don't, honestly. That means that we might not be going any more higher. Maybe we'll find good resistance here, and then we'll drift back down. But again, I'll get a little bit more excited with the larger correction to the downside if we do break this upside line, because then at least I can start monitoring my Fibonacci's, which, by the way, and this is why I like this really level. I mean, actually, I'm gonna highlight that for our future reference. So this one right here. Sorry about the amount of lines here, but all of them are required. So this is the area that I'm really keeping a close eye on right now. This is a very strong area of resistance so far, it seems like that. And look at this 23.6. Look at this beautiful territory. For that, in order to reach that, we need to see a break of this upside line here in order to go a little bit lower towards that, like I said, towards that 23.6, and then we'll go from there. But this area here is spectacular. I really like it. I really wish it could work out, but again, the market doesn't always listen to my wishes. So that's why we have to position ourselves carefully. For now, I'm watching this 16,300 zone. If we clear and stay above it at the end of the day, well, yeah, we could ignore this Fibonacci and we could go further north. So, oh, good morning, Daredevil Dave. Good morning to you too. I can see you there in the chat room. Thank you very much for tuning in and watching this one with me. Well, I'm also watching this one because I'm running it and I'm watching it at the same time. You know, I have it on the other screen, just on mute. But anyway, guys, yes, I hope you're having a wonderful start of this day, of this first trading day of December. So let me just double check something very quickly. Yes. So okay, yeah, all right, okay. Right, okay, just a second. I'm just checking something here. Right, that's fine. Now, coming back to the indices, FTSE 100, beautiful rebound. Look at this. I talked about the idea of a rebounding from the lower side of the rising channel. So far, it's working out nicely. I talked about this idea in the beginning of this week. We tested the lower side of the rising channel. Boom, fantastic. But as I said to you, my preferred scenario to the upside is not only from here, but actually from here, from around the 7,535 territory, which if we break, we could also push above all of the EMAs on my daily chart here. And then I'll consider a move towards this downside line drawn from the high of the 15th of September. US dollar index. So there we go. Popped nicely, and this is what I kept on saying, guys. Wait for that move. Wait. If you were watching my webinars recently, and this week, I said to you, look, we are in this formation. I said this one, that if whenever we have a sharp decline and then a gradual decline, we kind of tend to have a break to the upside. However, break of that upper side is still needed because it could still drift lower. Because I think I have a USDCHF which worked in the. I will check. I think I want to have one of the pairs which worked in the opposite direction. But also we always wait for that confirmation break, and there we go. We got that break. We got the break of the downside line here. So the upper side of the falling channel, and now my next target is this other downwards moving trend line drawn from the high of the 1st of November. So I'm only targeting that, and then we'll take it from there. Gold. Now gold is a tricky one. I mean, this one can fly still even if the US dollar rises. So because in a way, if everybody starts seeing gold as a safe haven, then, you know, together with the US dollar, then both of them go higher. They're just both strong, basically. But just one can be the stronger one. Look, in general, I said it before. Yesterday in my analysis, I don't know if you watched my yesterday's webinar, but I talked a lot about gold. And look, because in gold, we have an interesting moment. We have this situation where we're approaching this key resistance barrier near the 2080 zone, approximately around there. If that gets cleared, and I said it before that maybe this could be a sign of a new era, because everybody got used to the gold being around the 2000 mark, like this 1900 zone as well. So as you can see, for look at the past from April 2020, we have been in this area. I mean, we did not fall. So if the market is preparing for a new era for gold, then guess what? 2,200, here we come. This is my kind of personal view. I don't know if this is going to happen for sure or not, but judging by this, judging by the Fibonacci extension here, the 61.8 sits around 2,180 zone, something like that. Then the 78.6, 2,330. But look, it's really subjective. It's not really objective, because it's really subjective depending on how you're going to draw the Fibonacci. So you can draw it a little slightly differently. I mean, there are other points here, but the ones that I have here, let me just adjust this back here. So look, in general, I'll stick to the short-term perspective, short-term analysis for now. But in general, I think that there is potential for this one to go even further north. My only question is timing. Will that be when, let's say, if we do reach that 2080 zone? And will we go further north from there, or actually will we correct back down first. We'll get like a strong correction lower, because in general, I would say, look, I mean, if we do have this idea here, then maybe we could, if we draw an upside line from this, so maybe we could correct back down towards that below the 2000 mark, maybe 1950 area somewhere here, rebound, and then push higher. So basically forming something of a nice ascending triangle pattern. But again, that's a little bit too far into the future. I don't have as I said, a crystal ball, but a good idea it could be. But at the moment, let's keep it short and simple. If we do pop above the 2048 zone somewhere around here, I will get a little bit more excited with the upside, and I'll aim for that 2080 zone, somewhere around there. Not exactly, maybe a little bit higher, maybe a little bit lower, but somewhere in there, and then I'll take it from there. Because then I would like to see a little bit of a correction before, let's say, that big pop higher, if that's going to happen. But yes, I mean, at the moment, I'm trying to figure out this one. Like I said, I'll examine the upside if we do pop above the 2048 zone. For the downside, at this point, I think I need to see a drop below this upside line. I mean, at the moment, any move lower is classed as a temporary correction before another possible leg of selling, leg of buying, sorry. And also, look, I mean, yesterday I talked about this 2035 level. Here we broke below it, we failed to stay below it, so now, and then we rebounded. So basically, yeah, it's again, we can look at the low of yesterday near the 2031. If that gets cleared, then yes, I'll go a little bit for a larger correction to the downside. Silver very quickly on that one before I run out of time, because I still have a lot to go through. Again, beautiful hold up here, 25.27 territory, approximately around here. It's getting a nice good hold up. So yeah, I mean, similar story. We need that pop again. We need that daily candle to stay above this. If we can stay above this, then great. Yes, more buyers here could join in. If we do break this upside line, then if we do fall back below the 25 territory, I'll consider a move lower. Copper, it's beautiful, honestly beautiful, because it had another test of my broken downside line here. It acted as a good area of support, but it's struggling with my 3.86 territory, somewhere around here. So I need to see that clearance in order to go higher. So at the moment, yep, I'm just watching the price action. Cautiously bullish, but I need that pop in order for me to go and aim for that 3.90 zone, and then we'll go from there. Oil. Ooh, look at this. It did reach my target and sold off. There we go. There we go. Beautiful, beautiful, guys. So let me just double check. I think yesterday we had the OPEC decisions. So let me just double check very quickly. So so there is basically there's skepticism of over voluntary oil output cuts for the first quarter next year. So basically, they're thinking that there's not going to be much many cuts from various oil producers. Yes. So, okay. So that means, yes, more supply to the market, and there we go. The price goes down. But in general, I'm very happy with it. Why? Because my target got reached. I was aiming not only for this downside line, I was aiming for this 79.77 territory, and came very, very close to that. Fantastic. Great. I will take that. Now, what's next? Well, the downside scenario is now back on the table. I mean, it wasn't off the table, but now it's even more on the table. It's more centered on the table. But it will be even more centered if we do fall below the 73.90 zone right here, and then we will go from there. Natural gas. So there we go. Fantastic hold up near this 2.86 zone. And I said to you that as long as we remain below this area, I will go continue targeting the downside. But I'll get even more comfortable with the downside if we do drop and stay below this hurdle right here, this 2.76 zone. I talked about this yesterday, so fantastic. Let's see if we can see that breakout today, or maybe going into next week. Let's see. For now, I'm just observing the price action, but I'm kind of bearish actually on this one. So Bitcoin, let's jump into Bitcoin. There we go. Beautiful move to the upside. Look, I have picked up on Bitcoin, and I've put this Where is it? Why is it not showing up here? There was an analysis made. Honestly, let me just double check. Where is it? Where is it? Where is it? Oh boy. Basically, this is the idea that I talked about. It's on the weekly chart. There we go. This is what I've done. Yes, there we go. I've looked at the weekly chart here, and yesterday I have thrown out a piece, an idea, and yep, there we go. So basically, it's kind of working out nicely, I would say, so far, because the idea was that if we are currently in this, if we look at the weekly chart, we are currently in this rising channel, and I said to you that, look, we're having problems with this 38,000 mark, and now it seems like we are clearing it. So if we can clear it and stay above it, above that 38,000 mark, my next target is the upper side of the rising channel here. We might get a little hold up here, maybe even then a retracement back down, and this is why I have drawn this way. And then if the 38,000 mark provides good support, then we could see a nice rebound here and a push higher, and again we could go towards that 40,000 zone, 42, 43 area as well. So yeah, a bunch of levels to consider for the downside on this one. I would actually like to see a drop below this hurdle, below that 35,600 zone, somewhere around here, because look, the fact that we're currently breaking above this 38,000 mark, that doesn't mean anything, because partially maybe it means, but in general, we did that already a few times. We failed to stay above it. So that's why I need to see that body of the daily candle staying above that area in order to go higher. Ideally, the weekly candle. But if it fails, then we could see a drift back down, and we could have here something of a range. And my downside scenario, as I said, this 35,600 zone. Ethereum, this one's popping higher, or at least trying to, so everything's working out according to the plan. This week I talked about this, and if you remember, I said to you that this area right here is something that I'm keeping a close eye on. And yes, I mean, this area provided fantastic support, so we rebounded from it. And yes, this move here happened nicely. Everything's in line. So my next target is the 2,142 zone, somewhere around here. And if that gets cleared, guess what? A new high for this year could be established, and we could go further north, guys. So let me just grab an arrow here. So this is what I'm gonna be looking out for. So we're currently approaching the current highest point of this year. Again, the third time. Maybe the third time we'll be lucky. We can break that and go higher. Polkadot. So there we go. We popped. I just talked about this one yesterday, and I said to you, keep your eyes on this downside line. If we can clear it and we can stay above it, great, I'll go higher. And this is what I'm going to stick to for now. I'm going to go to the upside unless we start breaking something like this. If we start breaking below this upside line drawn from the low of the 19th of October, then yes, I will consider a move back down. So something like this, basically, where I need to get rid of this downside line, no longer need it. But if this upside line gets violated, I will consider a move back down towards the 200-day EMA. In general, it would be nice. Why? Because we could drift lower. We could test the 200-day EMA. The 50-day EMA could have enough time to, let's say, cross the 200-day EMA and push further north, because we have not seen 50-day EMA crossing the 200-day EMA, I mean, forever. So that's what I'm saying. That's why I am kind of a little bit more bullish on this one, a little bit more positive. But again, yes, I would like to see maybe a bit of a retracement, and then kind of a beautiful test of the number 5 here, and then a rebound push higher. But let's see. Right, AUDUSD. So guys, in terms of RBA interest rate decisions, by the way, this month I think we are having another one. So yes, we are having the Fed interest rate decision, and we are also having let me just double check, remind myself, when is that? I think it's the week after, or not next week, the week after. Let me just double check because that one's gonna be an interesting one. Yes, there we go. RBA interest rate decision Tuesday. That's next week. So yeah, sorry, next week we have the interest rate decision Tuesday. Something to keep in mind. Last one for the year. Of course, the expectation is for the same number to come out again, 4.35. But hey, maybe there's going to be a surprise or something. But look, in general, Australia's inflation, let's have a look at that one. Australia's inflation is still high comparing to other developed countries. So that's why I would say, we could have surprises from RBA. And at the moment, we're seeing some weakness in the Australian dollar against the US dollar. Yes, we fell below this highlighted zone. I talked about it and I said to you that if we do drop and stay below it, my next target is the 200-day EMA. That's what I'm aiming for. So let's wait and see. Also, let's consider this move lower as a temporary correction before another possible leg of buying. So yep, if we do drop and stay below this territory, then yes, my next target is the 200-day EMA. For the upside, I need to see this one pushing back above the 0.6222 territory in order to start considering slightly higher levels. AUDNZD, fantastic, mission accomplished, everything worked out perfectly technically, and I am very, very happy about that. So I talked about this in the beginning of this week, if you remember. In the beginning of this week, we got the RBNZ interest rate decision. If I'm not mistaken, just let me double check that. That was on Wednesday, I think. Yep, interest rate decision. There we go. So yes, came out the same as expected, but I think that the fact that why it strengthened so much, I'm talking about the New Zealand dollar, is that I think the rhetoric that that they're still willing to go and hike rates, that's something that maybe drove demand for New Zealand dollar, and this is what we saw. In general, I'm very happy because this worked out according to the plan. We broke below this upside line, then I said I'm targeting the 1.0773, and then I said that if we do drop and stay below it, and we did drop and stay below it, my next target is the 1.07 territory. I do have these two levels here, but actually I'm kind of aiming for the territory always. So fantastic. I got what I needed. Congratulations. Now we can chill, and now we can examine a possibility of seeing maybe a further move south towards the lowest point of October, near the 1.0623 area. Not exactly the level, but area. And there we go. Let's see if we can reach that. For now, I would say this way, that maybe at the same time we are forming something of a falling channel here. So if that's the case, then guess what? Maybe something like this could happen. So that's why I will right now consider this idea. If we do fall again below the 1.07 territory, I will go lower. If we remain above this territory and remain above the upper, or should I say above the lower side of the falling channel, then yes, I will consider a move back up here. So that's what I'm looking at here. So let's continue. I mean, at the moment it seems like it wants to form something like a hammer or something, yeah. Let's keep an eye on that one. Just a second. I'm trying to find something. Yeah, looks like more like a hammer. Okay, or maybe even like something like a morning star. Yep, that's what I was trying to figure out. Basically, if my understanding is correct. So it seems like a morning star could be. That's a normal term in technical analysis for candles like that. So basically, like a doji, or not, it's not a doji. Doji is like when your wicks are almost even and you have a very like flat body, small body. So then yes, I mean, but this one, I mean, also looks like a hammer. Yep, something like that. So let's see. It still needs to end. We still need to see if that's going to be the case or not. Like a bullish hammer. So this is where my idea of a falling channel and a retracement within the falling channel could work out. NZDCHF. So far, we are loving the downside line. That's what I can see so far. We did push again higher. We then retraced, and we still kind of flirting with this downside line. So look, to be honest, for me, it's all fine. Still okay, as long as we remain above that downside line. And I'm still going to consider the upside scenario. I'm cautiously bullish. My next target, again, is the 200-day EMA. If that gets cleared, I'm going to go higher. For the downside, in the short run, I would need to see not only a move back below this downside line, but also a drop below the 100 and the 50-day EMAs, and then we'll go from there. We'll aim for the 0.53 territory, which I really love, and then we could go, if we clear that, then we could go lower. USDJPY, very quickly on that one. So beautiful retracement. I mean, talk about working out, right? I mean, this is working out nicely. Look, I talked about this idea here, and so far it's doing a good job. There we go. Let's see if we can pop higher. And for me, I have this downside line from the short-term perspective. So if we do clear this, I will go to the upside. Simple as that. For the downside, I need to see a break of this upside line. And also, at this point, I think I'm going to grab this line and I'm going to draw the lowest point of, I'm going to mark the lowest point of this week near the 146.67, and then we'll go from there. If we can get that clearance, this will confirm a forthcoming lower low. USDCAD, this one's liking the 200-day EMA, but it's kind of going below it, but coming back very quickly. So that's why I'm just going to leave this one for now. Look, if we do drop and stay below the 1.3540 zone somewhere here, then yes, I'm going to continue targeting the downside. So that's kind of simple as that. This upside line can go, no longer needed. But for my upside scenario, within the kind of within the retracement idea. So I need to see a push back up with the 1.3629 zone in order to consider a move higher. USDCHF, there we go. This is the one that I was talking about. So if DXY, dollar index, did kind of work with my theory, USDCHF did not, but it actually worked with the normal theory of technical analysis, because my theory is not normal. My theory is just purely observation. But this is like a normal theory where, you know, we have a strong candle like this, then you have a channel, and then it's kind of a continuation pattern. So and there we go. And look at this. This is fantastic. I mean, I just yesterday talked about this, and I said that if we do drop and stay below the 0.8745 territory, my next target is the 0.8690. Boom. Fantastic. Mission accomplished. Excuse me. Way too happy about myself. Mission accomplished. Now what's next? Well, maybe, let's get rid of this. Maybe we could see a bit of a move higher. So I'm going to keep this downside line for now, but also I'm going to overcomplicate life of everybody. And I'm going to put this downside line right here. So basically, if we are looking for some lower levels, then yes, as long as this downside line remains intact, the steepest one, then yes, there is a chance for a drift lower. But I would like to see a drop below the 0.8690 zone. And then I will go from there. For the upside, I need to see a push above the 0.8760. And if that gets cleared, then yes, I will consider a bit of a larger correction here to the upside. US dollar against the Mexican peso. Boom. Look, I talked about this in the beginning of this week, and I said to you, look, maybe this is forming a nice falling wedge pattern. According to all the TA rules, such patterns tend to break to the upside. Boom, there we go. We broke to the upside. We reached one of my targets, and look, I said to you that if we do pop above the 1728 zone somewhere around here, I'll aim for the EMAs, the 50 and the 100. Tick, tick. Fantastic. Now what's next? Well, I'm going to take a very conservative approach, and I'll wait for a push above the EMAs here in order to consider a move higher towards the 200-day EMA, or even this 1771 zone. So actually, you know what? This level, no, it's bad. It's not good. No, this is what we need to target. First, we need to target the 200-day EMA, see if we can reach that. And if that gets cleared, fantastic, we could go, no. Yes. We can go higher, basically, if we clear the 200-day EMA. For now, look, we broke the upper side of the falling wedge. I'm still kind of leaning a little bit more towards the upside, to be honest. But however, if we do start falling back below the 17.28 zone, maybe a bit of a move back down here we could consider. GBPCHF, there we go. We broke below this upside line. We reached my target. Boom, fantastic, mission accomplished. What's next? Next is this. So if we're keeping an eye on this little hurdle here, this 1.0990, that's what I'm going to do. I'm going to wait for that drop in order to go lower. So long story short, if we are looking for some, let's say, downside, then I need to see a drop below this hurdle. If you're looking for some higher levels, well, I think that it's time to consider this as range. So basically, when we clear one of the sides of the range, then we consider the next short-term directional move, period. GBPUSD. Fantastic results here, beautiful correction back down, but we're still above this upside line. So that means that maybe a nice retracement back to the upside here could be possible. I mean, sorry, not retracement. On the contrary, we had the retracement right now, a rebound back up, a rebound. So, however, I would like to see a push above this barrier right here, this 1.2713, in order to go to the upside. And if we can get that move, great, I will go higher. I will go towards that 1.28 zone, and then I'll take it from there. But at the moment, all eyes are on this little short-term upside line. If we can clear it, I need to probably tidy up my chart here a little bit because I have way too many lines. So I'm going to mark this. So basically, this 1.2591 zone, somewhere around here, is something that I'm going to be keeping a close eye on as well, because that's the current lowest point of this week, by the way. If we do drop below that, wow, this week will end up in negative territory. So, but look at this weekly chart as well. Beautiful hold up by this 200-day EMA. So kind of, let's say, if this is a shooting star, this is the morning star. Yeah, is it the morning star? What's the? No, that's not the morning star. The evening star. Yeah, that's the evening star, or the shooting star, basically, on the weekly chart. So this is yeah, if this is going to end up being that, maybe a bit of a nice retracement back down here could be possible. A nice move lower here, back to the maybe 100-day EMA or the 50-day EMA on the weekly chart. Because at the moment, I'm watching this upside line. EURGBP, fantastic result here. I mean, I reached my target, the 0.8615. That's fantastic. That's wonderful. What's next? Next is this. Basically, if we do drop below this, I'll target the 0.8567, and then I'll go from there. For the upside, I need to see, actually pretty straightforward, I need to see a push back above all of my EMAs. I don't have a specific level yet, but I need to see a push back above all my EMAs in order to go to the upside. EURCHF, beautiful move here to the downside. Look, I talked about this. I mean, talk about madness. Talk about a drop here on EURCHF. It reached my target. I cannot be more happy. And most importantly, it did violate my target, but it remains above my target. So this just proves to me that this is quite an important area of support. So now the question is, can we see something like this? Can we see like a rebound from this 0.9525 territory? If we can, then yes, great. I will consider a move higher towards the EMAs here, the 50, the 100, or the 200-day EMA. And then we'll go from there. So yes, for now, this is my game plan. I'm kind of, like I said, I would really like to see a rebound here, but hey, if we do eventually do drop and stay again below this 0.9525 territory, then yes, I will go further south again. And finally, guys, EURUSD. There we go, breaking the upside line. There we go, guys. So not feeling very well as the US dollar is getting stronger again. So look, for now, I would say this way. I'm keeping an eye on this area right here. This is the 1.0887. If we do drop and stay below it, I'm going to go lower. Yes, I'm going to go further south, initially targeting this 1.0852, and then maybe even this little hurdle right here, the 1.0825 territory, and then we'll go from there. I mean, look, at the moment, my upside scenario will be somewhere from around here, from around this 1.0965. If we can climb back above it, yes, I'll consider a move to the upside again. So that's it, guys. That's it for this week. That's it for for today, for this session. I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time, guys, your views, your rocket ships, your comments, everything. I really appreciate that. Thank you very much for sticking around with me. I really, like I said, honestly, a massive bow down to you. I hope November was not too cruel for you, because it was a little bit cruel to me, but hey, things happen. So, you know, but you know, certain things work out, certain things don't, but hey, it's a new month, new start. Let's kind of start fresh, you know, and let's see if, you know, but look, be careful, be cautious, and don't try to recover. Let's say if you made a loss in November, then don't try to kind of recover it during the whole December, because look, it's just gonna ruin your psychology. You're gonna be in revenge mode, not in like the analytical mode, so not in the pragmatic mode. So just we need to avoid revenge trading. Thank you very much, guys, and I'll see you on Monday. Yep, 7 o'clock GMT time. Thank you very much, and bye-bye. Hey there, thank you very much for watching this one till the end. I really appreciate that. So, like this video, we speculate your next mouse movement will be towards the subscribe button.